Are you tired of paying millions of Naira in rent every year, only to realize that money is gone forever? Most Nigerians believe that owning a home requires having the full bulk sum up front, often leading to a cycle of saving forever while property prices continue to skyrocket out of reach. But what if I told you there is a functional, transparent mortgage system in Nigeria that allows you to move into your own home today while paying monthly installments? In this video, we are breaking down the best way to own property in Nigeria using a mortgage. We'll explore a revolutionary government-backed fund offering single-digit interest rates of 9.75%, how you can qualify even if you live in the diaspora, and why a mortgage is actually the smartest investment choice to protect your wealth against inflation. How mortgages actually work in Nigeria. A mortgage is simply a long-term property loan that allows you to spread the cost of a home over several years, sometimes up to 20 years. Instead of paying 100% upfront, you provide a down payment, equity contribution, and a mortgage bank covers the rest. The standard process involves choosing a property that fits your budget, selecting a mortgage bank with favorable terms, paying your equity. Typically, you are expected to provide 20% to 30% of the property value. However, some specialized schemes now allow for as little as 10% equity. Repayment: you pay back the principal and interest monthly. You can choose between fixed rates, where your payment never changes, or variable rates, which can fluctuate with the market. One of the biggest myths is that mortgages don't exist in Nigeria. They do. There are primary mortgage banks, PMBs, licensed specifically by the CBN to focus on this, and they have been around for decades. Section 2. The Game Changer, the 9.75% MREIF Fund. Historically, the biggest barrier to Nigerian mortgages was the interest rate. Commercial banks often charge 25% to 30%, making repayments nearly double the original cost of the house. However, the Ministry of Finance Incorporated, MOFI, has launched the MREIF, Real Estate Investment Fund. This is a 1 trillion Naira drive designed to close the housing gap by providing long-term capital at a subsidized rate. Key features of the MREIF mortgage. Interest rate, a fixed 9.75% per annum. Tenure, up to 20 years. Stability: unlike commercial loans that might jump from 16% to 33% due to market volatility, MREIF rates are fixed for the duration of the mortgage. Accessibility: you can apply through participating financial institutions or check your eligibility via the MREIF.com website. Section 3. The step-by-step application process. How do you go from watching this video to holding your keys? The sources suggest a timeline of about 2 to 4 weeks for an efficient bank to process your application. Step 1. The assessment: visit the mortgage portal to use a mortgage calculator. This matches your verifiable income, whether you are a 9-to-5 professional or a registered business owner, to a property price you can realistically afford. Generally, your monthly repayment should not exceed 33% of your take-home income. Step 2. Underwriting and due diligence: the bank will evaluate 2 things, you and the property. Property evaluation. The bank performs a title search, (SHING), to verify physical boundaries and valuation. They ensure the property has building plan approvals so you don't risk the government pulling it down later. Your evaluation: they check your credit history and bank statements. Step 3. Equity and disbursement: once approved, you pay your equity. If you don't have the bulk sum today, products like HomeVest allow you to build up your equity contribution over several months while the developer is still building. Section 4. Diaspora and safety features. If you are a Nigerian in the diaspora, you don't need to fly home to start this process. Modern mortgage banks use technology for online KYC, BVN validation, and work verification. Using a mortgage is actually the safest way to buy property from abroad. When you buy cash through an agent or relative, you carry 100% of the risk. When you use a mortgage, the bank, which is putting up 70 to 90% of the money, does the hard search and legal due diligence to protect their investment, which instinctively protects yours. Bonus: The hidden benefit of insurance: every mortgage comes with insurance that you likely wouldn't get on a cash purchase. Fire and burglary insurance protects the physical structure. Credit life insurance. This is a miracle for families. If the borrower passes away or becomes permanently disabled, the insurance company pays off the remaining balance in full, and the property is handed to the next of kin debt-free. Section 5. Strategic Investment Advice. Don't wait for your dream mansion in Ikoyi. Start with a starter kit, a more affordable apartment in developing areas like the mainland or the outskirts of Lagos. The math of a smart investor: if you get a mortgage at 9.75%, but the property is in an area where rent is high, your tenant can essentially pay off your mortgage for you. You can put your own cash into other investments yielding 20% while paying only 9.75% on your home loan. This is how you build a real estate portfolio passively while protecting your money from the eroding effects of inflation. The best time to enter the Nigerian property market was yesterday. The next best time is now. With government-backed single-digit rates and digital platforms making the process transparent, there is no longer an excuse to stay in the rent trap. Visit MREIF.com or contact a primary mortgage bank today to start your journey. If you found this breakdown helpful, hit the like button and subscribe for more insights on navigating Nigerian finance.